raised multiple millions of pounds of investment through social media from people that we've never met before.
You've amassed a property portfolio across Bristol, and now most recently you are a Property Investor Award winner.
We started quite young, so we were in our early 20s. So we had the energy to work well into the night, 2, 3 o'clock in the morning, and then have to go to work the next day. We just had this real hunger and desire to do it. There was about a 6-month period where everyone was just sitting on their hands. Everyone thought house prices were going to crash. Right. Investors weren't buying. Nobody was buying. So, that we picked up another one with almost identical numbers. And we were saying to the agent, well, look, we're buying this one 335, so we'll pay 335 for this one. I think that was on for 400. That was the level of discounts that we were able to achieve during that little window. So when we started out, we were very much focused on refurb. But actually what we're finding is there's much easier ways to make money. The perfect deal would have an element of everything.
What is the opportunity cost than the actual cost of what you're forking out?
I think getting yourself out there, ultimately nobody's going to invest with you if they don't know who you are and what you're doing. But you see bad advice all the time. You hear it in the networking events, you see it online.
What traits does one need to have to become successful in property?
One of the biggest turning points in our business, I think, was
Before we kick off the episode, over 72% of you have not yet hit the subscribe button. So I would ask you a small favor. If you enjoy the content, if you're enjoying the conversations, you're liking the interviews, then please hit that subscribe button. It's absolutely free. And my promise to you is that we will make the channel better, the interviews better, the guests better, and we'll listen to your feedback and make sure we improve every single time. Now, back to the show. Hello, everybody, and welcome back to another episode of Property People. Today, we are in a new studio, and we are with Mr. Jake Cowell. Jake, how are you today?
Very good, thank you. Very privileged to be the first interviewee of the new podcast studio. So much so that I helped put it together.
I was about to say that. I was going to give you the credit for it. Without Jake, this would have never happened, at least certainly not on time. But thank you so much. It's funny because we arrived here early to get the final bits and pieces set up. And I did tell Todd, who we film all of these sessions with, that good thing we've got Jake coming in first because he's quite helpful on the tools, which we're going to jump into. And we're going to go through a whole bunch of stuff.
Yeah, sure.
Just to give you a quick introduction, Jake, you are one half of a husband and wife duo for Innova Property.
Correct.
Along with your lovely wife, Lucy, who I know very well from my time in Sheffield, with you doing a mastermind. You've amassed a property portfolio across Bristol, having done plenty of refurbs, flips, high-yielding HMOs, and you've even bought a church at one point.
Yeah, the bane of our lives, but
You've been doing, you've taken investor finance, you've done a whole bunch of off your own back. You've been on the tools we mentioned earlier before. And now, most recently, you are a Property Investor Award winner.
Absolutely.
So congratulations to that. It's great to get some one-to-one time with you, finally. Where do we normally start, though? At the beginning. Got a lot to cover. But what I would like to know is, who were you at school?
Who was I at school?
Were you studious? Were you mischievous? What kind of person were you at school?
No, I probably wasn't the most academic at school. I was clever enough, I got good enough grades, but I grew up by the coast down in Cornwall. So, particularly in sixth form, me and my mates would probably be found down at the beach rather than, in our lessons, doing the bare minimum or revising, on the sand dunes in between sort of surfing and that sort of stuff, really. So that was me at school, but always also kind of a hard worker. So my dad always ran his own sort of small businesses. So he ran a business selling and fitting kitchens. So my sort of weekends, school holidays to earn cash, I was grew up on the tools. So I was helping out doing, bits and bobs with his kind of fitters and stuff. So that's kind of, I guess, my very early entry into property was renovating houses for people, ultimately.
And you went specifically into fitting kitchens. That's a very niche part of kind of the whole value chain of construction.
Yeah.
And that was because of your dad was already in that trade?
That was it. So it was purely just working for him, in spare hours to earn cash, and that was just naturally just what he was doing. But what you would do as a kind of sort of a kitchen installation company, it kind of spans all different trades. So you end up like doing a little bit of electrics, a little bit of plumbing, quite obviously carpentry, a bit of tiling. But then customers would quite often ask you to do extra bits. So it would kind of span into some sort of basic building works as well. So we kind of had a bit of a wide breadth of experience, which I think's really helped then later on in our property journey, because I've kind of known what I was talking about.
The kitchen is sometimes the centerpiece of the whole house, right? Yeah. It's like in sales, it's the family room. It's where the hopefully the decision maker of the house, being the mother that kind of controls the whole family affairs and stuff. It's the big family room that goes out into the garden, etc. What kind of kitchens are we talking though here? Are we talking kind of, a lot of people watching this be investors, developers, they're talking like thinking Magnet, they're thinking Howden, they're thinking LMPG, or are we talking about?
Yeah, so my dad's business was very much on that sort of level, so it was Cornwall, it was selling into, sort of farmers, surfers, those types of customers. So it's quite deprived actually in parts of Cornwall, so there's not tons of money. You've got obviously affluent sort of hot spots on the coast, like sort of Rock and Padstow and things, but that wasn't really our market. So the entry into the sort of home improvements world was kind of, sort of 5 to 15 grand kitchens. But then after uni, I ended up going, so I left Cornwall, went to uni in Cardiff. That's where I met Lucy, did a business management degree. And after that, got a job for a high-end German kitchen company. And that was kind of leagues apart from what I was doing previously. So, we were selling sort of 100 grand kitchens that were coming from Germany. It was all bespoke, super high-end, super premium. And it was very different. Yeah, it was a gear change in terms of like the customer expectations and the people that we were dealing with. I wasn't so involved in kitchens at that point, so I was a regional manager. So it was a franchise, and I was responsible for the south of the UK, and I would go around helping people set up their showrooms and their businesses, and then acting a bit like a business sort of consultant advisor, helping them to then grow their business. So we'd be looking at like cash flow forecasts, P&Ls, right. Figuring out what margins they needed to sell these kitchens at, how could they increase their conversion rates, all that sort of stuff, whilst in the background still having the understanding of how to fit a kitchen, how to design a kitchen. So it put me in quite a good place for that particular role. But it was never the long-term kind of vision to keep working in the corporate world. Kitchens was what I knew. Got the business management degree that helped me get that role.
Right.
But we were always kind of straight off the bat, from leaving uni, doing kind of property stuff alongside, really.
And so, because some people, I talk a lot about it these days, is having a property investment business and then a trading business alongside. Yeah. And obviously there's a lot of crossover with these two types of things, because there is a construction element. You need a kitchen in every single property. But from getting the business management degree, working for this German kitchen company, well, actually, out of interest, what was the most expensive kitchen that you ever sold?
So it wasn't me personally, but one of the showrooms sold a kitchen for £256,000 for a single kitchen, which seems mind-blowing, right? When we're buying kitchens for sort of sub 5k from Magnet and LMPG.
If we can get sub 5k, we're like, that's the top end of the.
yeah, absolutely.
So I mean, these are significant kitchens. And then the property stuff was happening alongside. You were kind of doing it in the background as a side hustle that hopefully become the main staple.
Exactly that. So we always kind of knew we wanted to get into property. Obviously, I had the on the tools experience, so I kind of felt like I knew what I was doing in terms of renovating property. Lucy had an interest in the design side of things. And being sort of students living in student HMOs, we were kind of seeing how much our landlord was making, and we actually remember it very distinctly when we were in our sort of third year of uni. We sort of sat down as we come into the end of our sort of studies, and we're like, well, what do we want to do? And we both agreed that actually we want to pursue a career in property.
Excellent.
But we have no idea how to do that. We're students, we're, strapped for cash. So we're like, okay, that's like the vision. No idea how we're going to achieve it. So we'll just set out, building our corporate jobs, earning cash that way. And then we both got a small bit of inheritance, about sort of 30k each. We managed to save about 10k. So that was our sort of starting pot.
Wow.
So we ended up buying a flat to live in. And we, in essence, just bought the worst flat in the best area.
Yeah.
We didn't know anything about anything, really. We were just so naive. Sort of, I don't think we even bought it at a particularly good price. We just thought, You know, it's got ivy growing through the windows. It's got no central heating. It must be good value, right? Looking back on it, it wasn't good value, and we probably overpaid for it. But
Wow.
we moved in. We lived in it whilst doing all the work. You know, we did everything. You know, we fitted a high-end kitchen because I could get one cheap. You know, it had Miele appliances in it. It had a downdraft extractor and a hot water tap, quartz worktop, sorry. And we just misunderstood the market, and it ended up selling to a student. Right, what student needs Miele appliances and a boiling water tap? You know, it's crazy.
Quartz worktop.
Yeah, but it you know, we came out of it with a little bit of profit. You know, looking back, it wouldn't be worth doing again. But you don't know what you don't know. You know, we made enough to give us a deposit for our first buy to let, and that's kind of where this whole idea of, you know, flip a property, generate a bit of cash, use that profit to buy investment properties, and kind of, you know, run the two side by side. So it created like a bit of a light bulb moment for us. Well, actually, this works. So we just got our head down and just started doing that as many times as we could whilst working, really.
That's impressive. And how did you manage the time between working full time? Because I assume that's going to be 9 to 5, and if you're working hard, the rest, and then you've got so you've only got really evenings and weekends. Get your viewings done, source materials. And I know that, having spoken to you and Lucy many a time, you're very, very prone to wanting to get your hands dirty, roll up your sleeves, and do the work yourself. Partly because you enjoy doing it and you're good at it, but also you save a bunch of money, so the temptation is huge. How do you manage to get everything crammed into a 7-day week?
I think something that worked in our favour is we started quite young. So we were in our early 20s. So we had the energy to work well into the night, you know, 2-3 o'clock in the morning sometimes, and then have to go to work the next day. And, you know, we would not have the energy to do that now, or the motive. But back then we just had this real hunger and desire to do it. And we kind of knew that the more work we did ourselves, the less the refurb was costing us, so the more profit we would make on a deal. So therefore, you know, the bigger pot we would have to then go and invest in investment properties off the back end. So we did the first 5 or 6 refurbs completely ourselves. So pulling in some favours from friends and family, and my brother's a qualified electrician and stuff like that. So pulled in some favours, but pretty much did it all ourselves. But yeah, it was a struggle. It's, you know, it's a lot of sacrifices in terms of, you know, missing social events, evenings, weekends. You know, if there were parties going on down in Cornwall, you'd be up till 2 a.m, but not at the party.
Yeah,
we'd be potentially in Cardiff renovating a flat, you know, sleeping on an airbed, rather than, you know, being down in Cornwall at that event or whatever. So there's a lot of that happened, but it got us started. You know, that sweat equity. And really just maximising the profitability of those first few deals, then gave us this pot that we could then start investing, and then it's kind of snowballed from there, really.
And so you mentioned like that we've got Bristol, we've got Cardiff. You just mentioned down Cornwall. Yeah. So that they're not exactly close together. Was like a 2-hour drive each way?
Yeah. So I guess it was one of the mistakes that we made early on. Is we were kind of quite naive and we were chasing the deals. So we were kind of open to different areas. It's very hard to make deals stack in Bristol. It's a super competitive market. Capital values are quite high. Loads of competition. Loads of, you know, developers who are kind of quite long in the tooth, cash rich. You know, they can pay more than you can potentially if they're not factoring in finance costs, or, you know, they've got existing relationships with agents. So we were finding it quite hard to make the deals stack. And when we did our first couple of flips, you know, if we were only making 25, 30K on a flip, you can't buy anything in Bristol with that. So what we were then doing is we were going across the bridge to Cardiff, where you could still pick up, you know, 1-bed buy-to-lets for, you know, low hundreds, 120 grand. So, so you could then make that cash stretch to a deposit, and then we would sort of maybe turn that 1-bed into a 2-bed and then refinance it that way. But it was slightly born out of necessity. In terms of just not having the cash to do more expensive deals in Bristol, but also a bit chasing the deals. And actually, one of the biggest turning points in our business, I think, was saying like, enough. We're just kind of, you know, we're just becoming like busy fools. We're just like, you know, rushing because we self-manage everything as well. So we were, you know, popping over to Cardiff to do some viewings, And then we were like having to get back to, I don't know, meet a builder to meet them, let them into a project. But then we like had full-time jobs as well. So
And
trying
you
to
had to do a
juggle
viewing as well.
and a viewing. And then it's just like, you're just here, there and everywhere. You're stretched super thin.
Yeah.
So we said, no, we're going to stop that. We've sold some of the portfolio in Cardiff. We've just got one flat left there. We are trying to sell the chapel down in Cornwall, but it's the bane of our lives. I mean, how long ago were we on a mastermind together? Like 4 years ago, and we bought it then, right? It's been stuck in planning for 4 years.
So you still own the church?
Still in
chapel?
the church, yeah, still in the chapel. Yeah, we sold it twice. The first guy exchanged. He couldn't complete due to his own financial reasons, so it fell through. Sold it again. They can't get finance on it because it's not got planning. So we think we're close. We've just figured out a way to make the site nutrient neutral, which is the issue, right? So 4 years later, the council still haven't pulled their finger out and created this credit system. So we've engaged with a load of consultants and
nutrient neutral.
Yeah.
Just so for anyone that doesn't know what that is.
So basically, it's in the Cowell estuary. So it's the river that flows from like Weybridge into like in between Rock and Padstow, and they tested the water quality and deemed that it had too many, I think it was too many phosphates in the water.
Wait, there, Weybridge in Surrey or
Wadebridge in
Wadebridge, okay,
yeah, Wadebridge.
sorry.
So too many phosphates or basically like pollutants in the water. So they've said, right, we're going to put a stop to all new housing developments in this catchment unless you can the developer can prove that the development is nutrient neutral. So i.e. not adding any extra nutrients into the sewer. Because South West Water can't cope, so when it rains heavily, they just dump the sewage into the river, pollutes the estuary. All right, so that's fine. If you've got like a housing estate, you could potentially lose one plot, put a water treatment plant on site. You could treat the water, or take the phosphates out of it before you then pump it into the sewer. Fine, but this particular site, it's kind of landlocked. So it's a chapel, so it's in the middle of the village. It's got a neighbour either side, and then a road to the front. So no external sort of garden, really. It's got like a little bit of a courtyard. So there's no possibility to mitigate this, the phosphates on site. So we're just going around the houses, like looking at different options. The council, in theory, one day will come up with like a credit system where you can pay to upgrade like somebody else's sewage system, or you can create a wetland somewhere else to then offset it somewhere else. But that's been 4 years in the making. So what we've ended up doing is coming up with a solution where we're going to drill a series of boreholes, because you can drill boreholes in quite a small space. So we can do that on our land and divert the rainwater, because currently the rainwater goes into the sewer. Divert it away into a holding tank, which will then trickle into these boreholes. By taking the rainwater out of the sewer, it reduces the load on the sewer treatment, whatever South West Water do at their end, which then has like an offsetting effect.
Absolutely. So how long has it taken for you to come up with this solution?
Well, once we actually finally engaged with the correct consultants and companies that could offer these solutions, not very long. So it's probably a lesson for the future and for the listeners is that, don't rely on the council to come up with a solution. It's better to take matters into your own hands. Basically, the planning officer has been saying to us for probably 2.5 years, we're consulting on this credit scheme and it's coming. So we're like, okay, well, hopefully it'll just be another month or 2 or 3 or 4. And then they put something out, said, it'll definitely be in place by the end of 2024. And then here we are midway through 2025, and they've still got no end in sight for this. So we're just like, this is, getting ridiculous. But obviously we'd sold the chapel, so it kind of didn't matter to us at one point, but we wasted about a year. We offered the guy like an exchange and delayed completion while he got his finances in order, and then his own development went wrong. He couldn't come up with the funds, so he pulled out. So we kept the deposit, resold it, and then we thought, actually, let's get this sorted now.
What's the planning you've gone in for the chapel?
Conversion to resi. So we bought it at auction with a positive pre-app.
Yeah.
So the council support it, the local parish council support it. So we put the planning app in, created an amazing scheme. It's got like this like double story, like vaulted, almost like a cavernous kind of open plan kitchen diner with the big stained glass windows and exposed A-beam, A-frame. It will look incredible. We had some CGIs produced. It will look great. We only had one objection from a neighbour. So it was all good, all sailing through. And then this whole nutrient neutral thing came out the woodwork and just scuppered us.
And so it'll be one residential house, or
One residential house, yeah. 4 bedrooms and just a huge open plan living space.
are you thinking you're going to build it out, or are you just going to get the planning and flip it?
No,
or?
so we've got somebody who's going to buy it as soon as the planning's approved.
Got it.
So
you've got sold subject to planning.
Originally the plan was to build it out, but it was around the same time that we were like, actually, we're just going to focus purely on Bristol. We're just going to keep it super tight. We don't want to be managing, 300k refurbs down in Cornwall or anywhere else. We want to just keep it. Ideally, if we could invest in the same postcode that we live, so we can walk to our sites. That's the level of, kind of that we want to kind of niche down to, really.
The niching down to Bristol, because you've taken things through planning. We just talked about. You've been doing flips. You're buying and holding with tenants in different locations. So the niche down in Bristol, was there a strategy as well? Was it kind of like we're only going to do location-wise flips, or was it we'll do anything in Bristol as long as we can make it work?
Yeah, so we've kind of said, right, we're just going to become the experts of the Bristol market, okay? And, markets change. So we were flipping kind of family homes, and those margins were getting tighter and tighter. By the time you're factoring all the extra stamp duty, you factor in bridging fees, owner-occupiers will always pay more than you will as a developer. So it was getting harder and harder to make those deals work. So naturally, then we had to start sort of pivoting into some slightly more creative strategies. So we did a small sort of commercial to resi conversion, bought a shop, converted into 2 flats, that sort of stuff. There's still margin. We've then gone into doing sort of freehold blocks of flats, chopping those up and selling them off individually. Obviously, you're moving away then from the owner-occupier market into a more sort of commercially minded transaction, really. So you can negotiate harder. People are a bit more open to doing deals. So we haven't sort of pigeonholed ourselves and said, we only do HMOs, we only do flips. We'll do whatever works in the market conditions at the time, but we're just going to niche down on area so we can be super reactive. If agents call us and say they've got something off market, we can be there the same afternoon and view it. If builders are on site and they say we've got this problem and we really don't know how to overcome it, we're there, we can go and resolve it. We're not having to say, oh, well, sorry, I can't get to Cardiff for 2 days, so can you just down tools and park it for a minute? We can be super responsive, and that was hard to start with, but once you get your feet under the table and the agents get to know you, probably we bought 15 properties last year, and I'd say over half of them were off market. So either through agents before things hit the market, or through vendors who we've maybe bought from before or we know and they're looking to offload stuff. So really, whilst it was hard to start with, it's paid dividends in the long run.
And 15 in 12 months? Yeah. And these are buildings for title splits, they're single dwelling houses for refurbs, it's just a bit of a mix of everything?
Bit of mix, yeah.
Is there one in particular that you like the most in terms of, do you like, because you obviously like doing the refurbs yourself, but now you've got a kid as well. Surely that stuff's harder. Do you prefer the paper exercises from the things like title splits?
Yeah, definitely. So, so when we started out, we were very much focused on refurb, add value through refurbs. It's what we knew, right? So we just did that. But actually what we're finding is there's much easier ways to make money in property. It's not all about the refurbs. So in an ideal world, I think, the perfect deal would have an element of everything, right? So you'd buy it well and you'd bake in some profit on the way in. You'd add value, maybe through planning, maybe through title splitting, maybe through, lease extensions, whatever that looks like. Then, potentially there's an element of the refurb. You've then still got to be commercially minded with your refurb. If you're going to do a loft conversion, it's going to cost 70 grand, but it's only going to add 70 grand. Well, if you're looking at the BRR model, it's not really worth doing because you're only going to get 75% of that back. So the refurb's still got to make commercial sense. And then obviously you've got the kind of the re-gearing on the back end, the refinancing, whether that's based on rent roll or if it's based on bricks and mortar. So
with the build cost going up recently as well, that must have made the refurbs even harder as well to make the deal stack.
Yeah, I mean, everything's kind of been getting squeezed, really, hasn't it? Your purchase prices are kind of still quite high. The market, I think, has softened a little, but it doesn't necessarily mean that prices have fallen people have still got quite high expectations, especially the owner-occupier market. Build costs went up and are only really seeming to still creep up. I don't think the builders have quite caught on yet that demand is maybe dropping off a little bit. And end valuations have softened, certainly on the investment valuation side of things in Bristol anyway. I don't know if you're seeing the same with your clients across the board. But
Yeah, more or less. I mean, Bristol is an interesting city because it's one of the only net exporters of wealth in the UK, actually. It's a very kind of affluent place, and it generally has a lot of demand that far outweighs supply, and values have been going up. We had Susanna Cowell on recently. She's done very well over the last few years. And you can make money kind of in any part of the country, is that what I always say. Like, if you're in the northeast and the northwest, they're high yielding. You just got to know what kind of works in your local area for that given moment. So what
100%.
somebody like Susanna maybe have been doing kind of 10, 15 years ago might not work today. What I was doing in London, North and East London 20 years ago certainly doesn't work exactly the same way today. So it's all about being able to know what sort of strategies are available to you. So how have you been able to come up with like knowing more about title splits? And because a lot of people watch Homes Under the Hammer and that's their kind of entry into property investment and development. It's like, I'm going to do a refurb and then either flip it or rent it out. But with all these other creative strategies, how have you been able to get comfortable and knowledgeable about these sorts of things?
I think it's all around surrounding yourself with the right people, right? So we've never like paid for any kind of formal training or anything like that, but we would always be, we kind of are strong advocates of being like part of a mastermind. Obviously, we were on a mastermind together, surrounding yourself with the experts in all the individual fields. So we are not the best at title splitting. I don't think we're the best HMOs. We won an award, obviously.
Well, some people might argue otherwise.
HMOs, but I know people that do far more HMOs than we do in Bristol. And their numbers are much better than ours, and they're much more aggressive. And we will then speak to them. They'll be kind of our kind of we'll consult if we ever have an issue in a particular strategy. We'll just go to the experts. Similar with title splitting, similar with flipping, commercial conversions, whatever it is. We surround ourselves with the experts.
Yeah. And
we've kind of just had to come to the realization that we are not the expert in anything. We're like the conductor of the orchestra, if you like. If we've got a planning query, we'll go to our planning consultant. If it's a build query, we'll just pick up the phone to the builder. We'll just speak to the relevant people and get the advice from them. And that's what's kind of enabled us to, I guess, span or jump between different strategies. By paying or just asking advice from the people that know better than we do.
It's always the way, isn't it? Like, some people think that, like, you become a property investor award, you must have been doing it forever. Somehow you've known everything from the start, or you do so much analysis that you mitigate all your risk. But just like how you bought your first property, and you probably bought a little bit more expensive than you should have done, but that whole kind of screw it, let's do it attitude, just get going with the faith that you are surrounded by good people. You've got a little bit of common sense about you in terms of your approach, and you should be all right. One of the other interesting things that I think a lot of people struggle with is access to capital. So with Bristol being one of the higher valued areas in the country, a lot of people from London or across the country, they're always going up to the valleys in Wales, or they're going to the northeast, northwest, because the property value is a lot lower. You can do a lot more. You've been able to do joint ventures and raise private finance. How have you been able to do that? What was like one of the most important things that you've done to be able to unlock those opportunities? This episode is sponsored by Merryoaks Property Finance. Merryoaks is a property finance brokerage, and we support SME property investors and developers across the UK with all of their funding requirements. So whether it be bridging, development, refurbishments, commercial term loans, buy-to-lets, social housing, HMOs, VAT bridging, the whole 9 yards, whatever property finance requirement you may have, we can support you with that. So if you're interested, please reach out in the show notes, and we hope to hear from you soon.
I think getting yourself out there initially, ultimately nobody's going to invest with you if they don't know who you are and what you're doing. So we use social media, and we always have. So right from the very start of our business journey, so to speak, we knew that we'd run out of money. We knew that we had a very small pot, and we could flip 1 or 2 houses a year, but it was never going to really kind of set the world on fire. So we knew that we were going to have to raise additional, capital if we were going to grow this portfolio. So we were just putting ourselves out there, networking a lot, sharing a lot of stuff on social media. I guess never being too salesy and just doing lots of good deals. I think action leads to opportunity. So the more that you do, the more that people see you doing, the more credibility you've got, the more experience you get, then better deals start coming your way. Once you start getting better deals, raising finance is easier. And ultimately, we treat our investors like our main kind of stakeholders, really. Ultimately, without them, we wouldn't be able to grow the business that we do. So we pay them well, we communicate, we always repay them on time. If they wanted to come to Bristol and do some site tours, great, we'll take them for lunch, show them around some projects. They always get their quarterly updates. And actually, some of our first investors from sort of maybe 5-6 years ago, they're still investing with us now. Maybe they tested the water with a small amount.
Yeah.
And then when we went to repay them, then they say, actually, I don't want the money back. If you've got any other projects, and also I've had another bonus, can you take this as well? So just kind of keep increasing it. So it's great. It also creates a bit of a hamster wheel effect where you're continuously looking for more deals, because obviously if you repay the investors and then they go away and invest elsewhere, then potentially when you've got the deal, they're not available. So it's always trying to marry those two up. So at the time that your investors are due for repayment, if you've got another deal, close to completing, you can say, right, well, there's your money back plus your interest. Oh, but by the way, we've got another project. Do you want to invest in this one? It's the same as the last one, X, Y, and Z. And probably 90% of the time they say, yeah, we'll do that.
A lot of the time they don't need the capital unless they're going to go and pay off a debt or a mortgage, and they're going to retire, or they've got to buy a boat or something like that, which, people tend to want to be compounding once they've got that level of cash. 100%. And you've proved that you are a safe pair of hands. Yeah. And I think the communication that you mentioned, you do quarterly updates. Is that like an email to the database, or? Yeah,
so we put a lot of it used to be monthly, but it was just too much information to produce every month with the level of projects and stuff that we were doing. So it's quarterly, and it's an overview of the whole business. So we don't really share figures on social media or anything, but we do with our investors. So we'll give them a full breakdown of all the live projects, the financials, what's going well, what's not going so well, if there's been any snags. So they're not just getting an overview of the deal that they're invested in, they're getting an overview of the whole business.
Right.
And we'll send that out to all of our investors once a quarter. And then obviously they're always open to, if they've got any questions on it or want to know more about a particular deal, then they're welcome to.
And I remember we were talking about this beforehand, and you certainly did a lot of help before we kicked off this morning. You really you mentioned that from a kid, you were always out on site or getting your hands dirty and rolling your sleeves up. Now we talked about managing time as well. You were young back then, wasn't that long ago.
Yeah.
But you had the energy. Now you've got a baby boy.
Yeah, 18 months, yeah.
18-month proper baby boy. And Lucy must have her hands full, as you do as well. How are you now juggling with the buying 15 properties? Obviously, you're not working. You managed to get away from the day job.
Yep.
But the temptation, I remember shout out to Jade and Andy, by the way, for that great mastermind that they did. We used to talk about around the table that you always used to just want to do one more thing. I'll just check in and then get you to, how managing your time and energy. I'm 42 now. I find it more challenging every year that goes by. How have you been able to, with an 18-month-old, and with that urge that you always seem to have inside of you, that you just want to, because I do get it, especially with build costs going up. I know I can do it. I know that quickly. I know I can do it really good quality, and I can save a bunch of money. How have you managed to get, square that off in your mind?
I've struggled with it. I think Lucy is much better, and she's kind of probably the one that's laid the gauntlet down and given me an ultimatum and said, this is not sustainable. You cannot be doing, everything and then also jumping on the tools in the evenings and doing bits of maintenance and stuff. And it's the temptation when you can do it, it's really hard to not do it. You know, because you only see, okay, that maintenance is going to cost us this, so you just see that coming off the bottom line. But what you're missing is actually you could be spending your time so much better elsewhere, generating a lot more. But ultimately, my sort of value per hour is a lot more than I'd be paying the maintenance guy to go and fix a leaking tap.
Yeah, exactly.
So it's actually only been recently that we kind of, I guess, we do it all the time. We work ourselves to the bone, get close to burnout, and then sort of sit back and go, something's got to change. And yeah, the last time that happened, which was recently, we've drawn line under maintenance and said, I haven't been doing refurbs for a while. You know, when you're juggling 4 refurbs at a time, 5 refurbs at a time,
can't be done.
If you're on one site, then nobody's doing the other 5. So we use a main contractor, or we sub it out to individual trades. But I was still kind of always driving around, you know, to do a viewing with the tools in the back of the car, so I could just pop into this HMO and fix this on the way back. But really, it was stressing me out, because I was kind of on site doing these fairly low value tasks, thinking about all the high value tasks that I weren't doing at home, sat in front of my computer. But I hate sitting in front of my computer. If I have a day of admin, you feel crap at the end of it. You feel sluggish. You don't feel like you've achieved anything. It's all kind of documents or words on a screen. Whereas, you know, I quite like actually a day on the tools. You can stand back at the end of the day. You can physically see what you've achieved, and you've got a sense of, you know, kind of what's the word? Satisfaction, I guess. But the key thing for me was going, okay, so if we were to pay a maintenance guy 30 quid an hour to work for us for 8 hours and go around and do all these little jobs, it's going to cost us 240 quid. What's on my to-do list? And actually put a kind of a numerical value against it. So we looked at my to-do list. I was like, bloody hell, I'm not doing these things that could earn us tens, if not hundreds of thousands of pounds, because I'm out on site saving £240. And that was kind of like when the penny dropped that. Yeah, whilst it's a cost, actually, what you're sacrificing is
what is the bigger cost, basically? The cost, opportunity cost is far greater than the actual cost of what you're forking out.
Yeah.
Do you still do little bits of maintenance at home?
Yeah.
No, you know, it's really important that people understand this. If you are looking to scale, if you are looking to grow, there is just no other way, really. I think one of the things that I got comfortable with 15 years ago was having a cleaner. You know, just like I just can't. I don't enjoy it either personally. I think that's where it becomes slightly interesting for me, where people like yourself, you actually like getting your hands dirty and fixing things, just like you've helped us this morning with getting this studio together. So it's, but I certainly didn't. So I was able to outsource that, and I got so much time back. And we have this discussion at home regularly about, you know, should we get a cleaner to do more? And I'm like, yes, just get them in every single day if it is necessary, so that I can go out and do those other things. Now, the Property Investor Awards.
Yes.
I'm a judge of the Property Investor Awards, and I remember seeing your deal pop up. But for the benefit of the listeners, tell us about what you won, what category it was, what you won, and tell us about the deal.
Yeah, sure. So we won the 2024 HMO Investor of the Year Award at last year's Property Investor Awards. So that was a kind of it was the overall kind of category, wasn't it? So it was the application asked for a summary of the business as a whole and the deals that we've done within a year, but then I think it also asked us to particularly focus on one project. So that was a HMO project that we did in Bristol. So it was quite an interesting one because, you know, I mentioned earlier about how you've got the different kind of elements of adding value to a deal. So that was just trying to think of the dates. It was on the market and it had sold for around 400k to another investor, right? And this was before the Liz Truss mini budget. So was that 22, 23?
23, I think it was.
23?
Maybe 22.
22, I lose track. But so it sold for 400. The mini budget happened. Obviously, the economy there was loads of negativity. Interest rates jumped up. There was all this talk about recession, and it was just very negative, right? So the developer that was buying it pulled out. They dropped it price to 350. We came in and picked up for 335. So already, you know, we're kind of 65k lower than somebody else would really pay for
absolutely.
it like 6 months ago, right? So we built some margin on the way in. We kind of spotted an opportunity because it had a huge plot. So it's kind of end terrace with a big side plot. It already had a rear extension at the back. So we thought, great. So we went in for planning. We put planning in during conveyancing. So we put planning in. So we do 2 applications side by side. We do a PD application to approve all the building works. So that's basically side extension, loft conversion.
Yeah.
And this area wasn't Article 4 at the time. So also within the application, we say it's going to be a 6-bed C4 HMO. Get that rubber stamp, certificate of lawful use or lawful development approved. And then side by side, we're running another application to change it from a 6-bed to an 8-bed HMO. So obviously, once the 6-bed's approved, it then reduces the potential for objections and stuff.
Yeah,
You
yeah.
say, well, it's going to be a HMO regardless. So in terms of saturation levels and stuff, like we're making it HMO regardless. We're just asking for 2 extra people. Building works are exactly the same. You're not doing any extra work than we would do here. So we got that approved basically before we completed. So again, not only did we buy it well, we then added quite a chunk of value because of the planning, because it's now got planning to be an 8-bed HMO. We used our usual build team.
Yeah.
So we kind of knew what the costs were going to be. I'm just trying to think. So purchase price is 335. The build cost, I don't have the figures from me. I think the build cost all in was about 230-ish, and there was about 60k of fees. So I don't know if your maths is better than mine, but you know.
So say those numbers again. I'll write them down.
335 purchase.
335 purchase.
230 refurb.
230 refurb.
About 60k of fees.
And 60k of fees. So you've got 335, so 365, and then you've got 535, and then you've got 600k.
600k.
605.
So basically 600k all in. That one got valued at 840. So it was
wow.
Yeah.
Boom.
So more or less all money out. 8 beds, rents for £800 per room to students, so exclusive of bills. And yeah, we did a few of those in that year. So there was a period where the market conditions were just super favourable for those who were actually active. A lot of people. There was about a 6-month period where everyone was just sitting on their hands. Everyone thought house prices were going to crash.
Right.
Owner occupiers weren't buying. Investors weren't buying. Nobody was buying. So that we picked up another one with almost identical numbers. Also, purchase price was 335, and we were saying to the agent, "Well, look, we're buying this one for 335, so we'll pay 335 for this one."
Yeah, exactly. Cookie cutter approach.
Yeah, and again, the other one was on for, I think that was on for 400. So that was the level of discounts that we were able to achieve during that little window.
Amazing.
6 months later, everyone's back in the market, and everyone's paying asking price again.
Yeah.
So it was a very short period of time. And on paper, those are some of the best deals because they're all money out. They're not our favourite deals. They're in sort of slightly less desirable areas. If I look at some of our more premium HMOs in higher capital value areas, they're much worse on paper, but they're much nicer houses. They rent easier, better capital growth. So there is a trade-off there. And I guess part of hopefully what came across to the judges is actually we have a bit of a mix in the portfolio. So we've got some that we're focusing purely on BRR, put all the cash out to grow. And then actually, if we've done a couple of flips and we're flush with cash, we'll actually buy some more premium sort of stock in a more expensive area.
And correct me if I'm wrong, but throughout all of this, at some point, didn't you buy like a caravan and go traveling? Oh
yeah, so we converted a camper van. So we bought a Sprinter that we converted into a camper van.
When did you do that? When was it? Around about what time? Was that before Liz Truss or after Liz Truss?
I think it was actually around the same time. It was the same time because I remember we were in Croatia and we were reading the news and we were like, oh, this is all looking a bit bad actually.
Bit sketchy while I'm in the Adriatic Sea.
And we had like all these projects on the go and stuff, but we just kind of, we were listening to people like, Adam Lawrence and stuff like that, and actually just getting real data rather than just the hype from the media. And then also speaking to, other developers in Bristol, and they're like, well, valuations are still coming back fine, rents are still fine. So, everyone, the people who were really clued up, I think, were still buying.
That is always the way. In the media, it's never as bad as it sounds. It's never as good as it sounds either. And I think you just got to have a steady hand. And there are some things that can really shake things up. And I think, on the verge of war and homeland and stuff that can suddenly. Yeah. But otherwise, most of it's the cyclical stuff that goes up and down. And actually, if you can buy the dip, recently in the US, they had a huge dip in the stock market. And the people that have bought that dip have done really well out of it because it's recovered.
Yeah,
exactly. So, so you were able to do that whilst also, I mean, the reason why I mentioned the caravan stuff is because everything that you've done, you have a great sense of adventure about you.
Yeah. Well, that's kind of what we set out to achieve, really. So when we if we rewind to when we started our business, the reason why we wanted to run our own business and why we wanted to get into property specifically is to have sort of choice and freedom. Freedom to go where we want and do what we want without having to request annual leave, whether that's traveling, whether it's just being able to say yes to stuff. So all those events that we missed down in Cornwall or Tenby, where Lucy's from. We've just come back from Cornwall for a long weekend. I'm going to Ibiza on Sunday for a friend's stag do. We're getting back from Ibiza. We've got a party down in Cornwall that we're going to. Then we're going to Centre Parks. We'll work, and we'll be doing work in between it all. But we don't. That's why we designed this business ultimately. Is to have the location and the choice freedom to do what we want.
And if I could give you like a magic wand and propel, or a time machine, propel yourself kind of 5-10 years from now, do you have a vision of where you want to go with Innova? Is it some people like have dreams of doing kind of housing estates and 100+ units here and there, development stuff. Some people just really want to do more of what they're doing because they know, like, and feel comfortable in that area, in that space. And the biggest risk is not knowing what you're doing. And sometimes expansion can topple everything, all the good work that you've done over. 100%. So have you, because you've obviously got a young family now, how do you decide where you want to go? Do you have a vision?
And actually we do this exercise the end or the start of each year, really. So we've kind of got like a 5-year vision, and then we kind of just realign it every year just to make sure we're still on track, really. And we've come to the realization that we've spent the last 7 years focusing purely on growth, right? So it's growth at all costs, growth. What deals absolutely maximize the returns? How do we get the most cash back out? How do we keep growing? And actually, we've got to the point right now where we've got enough. We don't need to keep growing because there were points last year that were super stressful. We bought 15, but I think we renovated 8. We finished 6 projects in the space of 6 weeks. So you're finishing a project every week. We put some really serious deadlines on the builders to get things finished before Christmas because we wanted to list a load of flats for sale in January. So there was a period of it was not enjoyable, put it that way. So it's not all kind of
stress at home,
sunshine and rainbows, whatever the saying is. But so we kind of came to the realization that actually, look, we love property, we love developing property, we're always going to do that, but we don't necessarily need to keep growing the business through growing the number of units. So what we're kind of doing now is we're reevaluating the portfolio. So anything that maybe causes us a lot of headaches or doesn't quite meet the return on equity expectations we're offloading, selling, redeploying the cash elsewhere. So buying, probably kind of the best way to describe it is selling some of the worst stock and buying more premium properties in premium areas. So you still got the same number of units, but higher capital values.
Right.
Naturally, you attract a better sort of tenant demographic, and they're easier to let. They are, less headaches. And when you can't compete with location, right? So, when a market's getting more competitive, what are you going to compete on? Location, spec, price. If you're in the outskirts, you're competing on spec or price, right? So you're either having to drop rents potentially if the market's oversaturated, or you're having to spend more money on refurbs to increase the spec, and just, you can only keep going so far, and then the deals just stop working, right? Whereas actually the deals that we've got in the super prime areas of Bristol, these are like blocks of flats that we've bought that have not been renovated for 20 years. We put them on the market and they let immediately. We haven't had to spend 100K refurbing, this property. It's literally, some new carpets and a lick of paint, and actually people will rent it and they're happy because it's in the right location. So I think over, the next 5 years, we'll be doing a lot of sort of capital generating plays. So a lot of flips, maybe some commercial to resi stuff, but selling it. Selling some of the lower kind of value stuff, and then redeploying the funds elsewhere.
Because the commercial, the residential stuff has become more and more popular. especially when buying residential now, you've got the 7% surcharge on the stamp duty.
Yeah.
And when you've got higher capital values, those higher values, that stamp duty really starts to eat in. Someone's got to take the hit. The seller generally doesn't like to do it. And so commercial conversion, along with the PDs, that still poses quite an opportunity.
Absolutely, yeah.
In terms of the sourcing of deals,
Yes.
some people go direct to vendor, some people go to estate agents, some people use Searchland and Nimbus maps and the like.
Yep.
Some use commercial agents, some you go to auctions. Do you have a preference?
Do all of it, any of it. I think if you pigeonhole yourself into one particular thing, you could be waiting a long time. So take direct to vendor marketing as an example, right? So one of the deals we bought last year, which is probably our favourite property, it's like the jewel in our crown. Like if people know Bristol, it's one street back from the Downs. It's in a super prime area. It's stunning, Victorian, detached block, bit of commercial, 2 garages, a workshop, loads of parking spaces.
Nice.
It's epic. That came off the back of a direct to vendor letter. But we sent the letter, I think, between 12 and 18 months before the vendor contacted us. So we sent out a batch of letters in this postcode. Didn't hear anything back. And out of the blue, 12-ish months later, the vendor called and said, look, got your letter, held on to it. He'd had a stroke. He didn't live locally. It was the only property that he owned. He had inherited it from his dad. It was his kind of, family kind of, heirloom type thing. And he was very passionate about it. But he was like, I can't keep coming to Bristol and doing the maintenance, because he was doing it himself. He was getting up on the roof and putting bloody flash band on leaks and all that sort of stuff.
Stroke, Jesus.
Yeah, this is it. So he was like, look, I've checked out your social media, I've checked out your website, I really like what you do. Obviously, you don't come across super corporate. We met him and his sister. We had Joss, he was probably, 6 months old at the time. And it was just very natural. And we were like, look, we love the property. What do you want for it? He gave us a price that was about 500k less than we thought it was worth. So we was just, shook hands there and then.
Wow.
And so one of our favourite deal, not the best deal on paper in terms of a return, because capital value is super high there and rents they're okay, but gross yield is very low.
Sure.
But the equity that we generated on paper, obviously when we bought it, was fantastic. And if we ever came to sell it, we would cash out at that point. So a good deal for different reasons, but took 18 months off the back of sending a letter. However, that being said, if we never started buying from agents in the first place and on the market, then we wouldn't get a lot of the deals that the agents start bringing us. You've kind of got to start somewhere.
Yeah, exactly.
And sometimes you can wait too long for that kind of unicorn deal, or you can spend too much time trying to produce the perfect direct to vendor campaign. Or we've been guilty in the past. It was in COVID actually, so obviously we were working from home, so we had a lot more time. So we were creating these really flashy kind of leaflets, had all these. It was all colourful and infographics. Why sell to us, and all these. No agent fees and all this, and it just didn't really work very well. And then we've just given up on all that. And we just got a very simple letter that basically says, "Hi, this is who we are. Seen you own this property. If you're interested in selling to us, give us a call." And it's just really basic. And
does it have your logo at the top or anything?
Yeah. So it's
very simple.
Here's our website if you want to check us out. We live locally and looking to buy stuff in this area, so give us a call. And it's super basic, but actually that's what's worked.
Fair play. And then when when it comes to raising the finance, because on one side you've got to be able to find the deals. Yeah. On the other side, you've got to know what to do with the deal when you find it, which you've accomplished. And then when you get the money, when you're getting the money, you can either get it as, I know you've done both. You've had private debt finance and you've had joint venture finance. Yeah. How do you decide which is going to be suitable for which project? Is it just based on their appetite and then you say, right, I'll find something that's suitable for you? Or do you have a preference to go one way or the
other? So our preference is debt finance on an angel investment basis, because you're giving the angel investor a fixed return, let's say 10%, but all the upside potential is yours, ultimately. So if you can deliver on that project really well and make, £200,000, for example, but your debt's fixed, or your interest in debt is fixed at 20 grand, you get all the upside potential. Obviously, with JVs, it's split. So obviously lower risk because you're not on the hook for the debt because it's their cash and they're in as like equity partners.
Yeah, exactly.
So lower risk but lower reward. So we've done enough of these deals and we understand the refurb figures and the end valuations well enough that actually we just back ourselves, prefer to raise it on a debt basis. And yeah, the investors they're happy with 10%. They know they're going to get that regardless.
Yeah, exactly.
So it's become quite easy to raise funds. We never thought we would say that. When we were starting out, it was very, very hard. And I remember when we raised our first 20 grand, we were like, we almost couldn't believe that this guy had invested the money with us. It's something that we didn't know.
How did you meet him? We didn't know. Was it through? Have you had socials? Yeah.
Social media to start with, and then met him at a few networking events.
Yeah, you kind of do the offline and so online, then you do the offline.
That sort of stuff, really.
But it's amazing the power of social media. You're meeting investors there, you're finding deals. It's like it is helpful. On that, who manages your social media?
I do. I've got a love-hate relationship with it. It's got us. It has been a fundamental kind of part of our business. We've raised multiple millions of pounds of investment through social media from people that we've never met before, right? And then those people have become, close contacts, friends even. I'm playing paddle with a guy later who's one of our investors.
Wow.
Who we never knew before. But
amazing.
But yeah, so it's been fundamental, but also you can easily fall into a trap of doom scrolling. And there's also a lot of nonsense advice on social media. A lot of people trying to like pull the wool over your eyes or sell you something or just a lot of stuff, and you just think that's just nonsense, or you're not factoring in the refurb, or there's a lot of rubbish out there as well. So I can't bring myself to be producing all the reels and dancing around on the screen pointing at numbers. So all we really share is project updates. Which doesn't really get much engagement. Obviously, social media now is pushing all the, more kind of video-based content, which I don't have the time to produce. But that being said, I see that our investors see the updates. And I think of it as, we're just updating them on the projects that they're invested in and what's going on. So if we only get 5 likes on a post, it doesn't matter. As long as those
the right
5 likes are the 5 investors, So I try and religiously use it. But I hate doing it.
Is there a minimum amount that you'd accept from an investor? Do you have a minimum ticket size?
That number's going up and up. So when we were starting out, obviously we were just scrabbling together for the fund. So we might have been doing a 50k refurb, and we would have taken that 50k from 10 lots of 5k investors if we had to, just to make it happen. But because we are so open book with our investors, ultimately, whatever time they require from us, we're available to them. It'd be very hard to manage loads and loads of relationships. So we'd prefer to have fewer larger investors. So naturally, the figures have been sort of just creeping up and up and up, really. So we don't really have any investors. Don't have many less than sort of 50. We've got a few sort of historical investors that've got a little bit smaller than that, but most kind of 50k plus now. And we kind of really have the core. There's a core group of investors who will just fund most of our deals. So we did a little deal last year that was a block of flats that we paid $240 for, sent 3 WhatsApp messages and raised it from 3 investors.
Amazing.
Never had to go, get a mortgage on it or anything like that. Just bought it in cash.
I think that is a dream for a lot of people. But I think if somebody was to follow you and look through your social media and all the projects that you've been doing and how you put yourself across, I think you come across as a very trustworthy person, and then the results that you've been able to prudently and successfully pull together are the reason why you've been able to compound and get to where you are. And in all of that, what is the best bit of advice that you've ever received?
Ooh. I wish you'd warned me you were going to ask me that before, so I think about it. I don't know if there's one single piece. I guess something that it's a piece of advice that I give to other people. It's not necessarily being given to me. It's a book, so it's called Who Not How. I don't know if you've read that book.
Love that book. Yeah.
Yeah. You probably don't need to read the book.
The title says it all. Yeah, exactly.
But for us, it's realizing that you are not going to be the expert of probably anything. To be honest, you just need to be good enough for all the individual elements and know how to put it together. But there are people who are the expert, the best in class in their particular field. So just work with them, pay them.
Find those people. That's the job, really,
use
rather
them
than exactly.
to unlock the deals. So really, it's all about relationships, knowing who to speak to, also who not to speak to. Who's actually just sort of all talk and no walk. And partnering with them, really, I think that's probably the best piece of advice that I can give. And we've been in so many situations where, we've had something that feels like an insurmountable challenge in front of us, and you pick up the phone to the right person and they just say, no, just do that, or just speak to this person, or just do that, or that report, or, they'll just help you overcome it like that.
Which has also helped you get off the tools, because if you know the right people to help you out, with that, you probably know how to do all these things, but who's the person that's going to be able to be trustworthy and get the job done to the same standard? In the same line, which is, what is the worst piece of advice you've ever received?
Worst piece of advice? I'm trying to think now. I mean, it's not me directly, but you see bad advice all the time. You hear it in the networking events, you see it online. I think it's probably from people who are very kind of book smart and, done all the courses and learned everything that, you can be taught online maybe, but haven't actually implemented it in practice. You see loads of bad advice, particularly around HMOs, around licensing and planning is a big one that you see all the time, right? And some of our mentees get advice from people like architects and planning consultants who kind of put themselves out there on these Facebook groups as the experts, and then they come to us and just that's absolute rubbish. They're mixing licensing and planning and all that sort of stuff.
I had it still gives me nightmares. It wasn't one of my deals, but there was a chap in Kent who his builder had told him, you can build a loft out. It's permitted development. You can just do it.
Yeah.
Of course, he built it and then went to get the planning or whatever. And they were like, no, you should have put the application in first. So they've told him to knock it down.
Oh, shit.
Yeah.
So we had a similar situation in Bristol. There's an old care home came on the market, and all the local developers saw it, and everyone was like sniffing around it. But it was... what was it, C2 or C1? I can't remember if it's C1 or C2.
C1's hotels, C2 the kind of care homes.
Yeah, so it was C2, right? So C2 has no PD rights to go to C4.
Correct.
C3 does, right? So we were all looking at this and then ran it past our planning consultant, and he was like, you need to demonstrate that there's sufficient other care homes in the area, and there's all these extra elements to it. So he was like, it's by no means a guarantee. So a lot of us kind of either offered subject to planning or just offered lower, just so that we had a plan B that we could flip it or, do something else with it, chuck it in the auction or whatever. Anyway, all rejected. It got sold to an out-of-town investor by a sourcer who took like a 10 grand fee, who said, look at this fantastic opportunity in Bristol. You can use PD to convert it to a 6-bed HMO. And they bought it. And they paid like £400,000 for this. And that was probably 2 years ago. It's still on the market now. And they've obviously realised
they're trying to put it back in the market, but no one's buying at that price.
Yeah, it also came back to us via somebody else who was like, you do HMOs, can you do anything like that? And I was like, well, yeah, this is the offer that we gave the agent a year ago. We'll offer the same thing to this new person. But they're like, but that's 50k less than they paid for it. I'm like, yeah, there's a reason for that. So don't always trust sources. There's also good sources out there, so don't. Yeah,
no, you know what? No, at the end of the day, some people get ripped off in terms of they invest cash into people's deals, and they go, "Oh, but I only signed a PG, I didn't know that I didn't have security." I was like, "Well, you're an adult. You should have known what you were doing at the same time." So it's a fine line. You've got to surround yourself with good people, but knowing who those good people are, that is your responsibility too. And deferring it to other people is just not a good look at all. In the long run, especially, certainly, as long as you have more successes than you have failures as well, because the church is a good example of how you've not been able to get your plan A off the ground.
Absolutely, yeah.
But that hasn't held you back because you've had far greater successes across the board. So that's also worthwhile bearing in mind. This podcast is called Property People.
Yep.
And you are obviously a successful property person. What traits does one need to have to become successful in property?
So I think a healthy appetite to risk, for one. There's always a trade-off between risk and reward, right? So I think if you're going to grow quickly and build a big portfolio, you need to get that balance right. You don't want to take on too much risk that potentially could, jeopardize the whole business, but you need to be taking on a bit of risk, whether that's planning big refurbs, buying stuff unconditionally or auction, whatever, because that's often where the bigger rewards and bigger profits are.
Yeah.
So I think that's a key. I think any business, you cannot, one of the things you cannot kind of make up for is work ethic. I've never met anybody who's built a huge portfolio or business or been super successful that, only works 1 or 2 hours a day. Maybe once you've built it, you can then
4-hour work week, but you get to that point by putting in a lot of work hours to get to that point.
Yeah, and property's it's not easy. Even if you're not on the tools, there's still a huge amount of work that needs to be done. There's loads of paperwork. There's obviously you've got to understand certain elements, whether that's planning, building, construction. There's loads more coming down the line with like health and safety and all that sort of stuff. So yes, obviously you can consult with the experts, but you still have a base level of understanding. So I think work ethic, that, and also it's whilst property is a bricks and mortar business, it's a people industry ultimately. Going back to my piece of advice, who not how. It's about getting yourself out there, networking with the right people, knowing who to speak to and who to turn to ask the right advice from, and then it all really it's just following the process and making sure your numbers are spot on. But even numbers, there are people that can help you with those numbers. Obviously, I know that you help a lot of your clients with numbers and deal stacking and stuff. So even if numbers are not your skill, not your strong point, speak to the people who know.
The property people.
Saam.
And Jake, well, interestingly, something that we didn't touch on. I know I could talk to you a lot more. We've got a lot more that we can go into, more deal diving. There's mentorship as well that you do.
Yes.
So part of the HMO roadmap with Andy, Graham. Very quickly tell us about that and tell us how can people find you if they want to invest, if they want to run some deals by you. Yeah,
so the mentoring thing, it's not something we do a lot of. It's not, our main business is growing our own portfolio, but obviously Luce and I are both full-time. Obviously we know Andy very well. We were on a mastermind with him for a couple of years, and he asked us to do a bit of mentoring as part of his HMO roadmap. So we said yes. So it's something that we will only ever work with a small group of people, probably, between 5 and 8. 8 would probably be our limit. Yeah. Any more than that, it starts detracting from our own business, which going back to like the kind of, the opportunity cost, we're obviously going to make way more money doing our own deals than we are advising somebody else on theirs. But it's something that we really enjoy. So it's good for people who've maybe got like a buy-to-let portfolio that want to transition into HMOs. Maybe they're doing HMOs, but they want to transition into something else. It's not just, obviously our experience is not just HMOs, but the typical clientele that we work with are very much HMO orientated. But yeah, people that want to kind of take it to the next level, really. So maybe they want to, do what we did a couple of years ago and step up the day job and use HMOs to boost their cash flow to go full time, or maybe they just need some help sort of optimizing their portfolio or that sort of stuff, really.
And I've noticed a bunch of people that are getting into HMOs because you think, it must have been done by now. There's Article 4 everywhere. But I've seen a lot of people creatively just buying old HMOs that are really run down. They're probably grandfathered. They don't have any en suites in them. And people are retiring because they're owned in personal names, and they're optimizing, adding an extra bedroom or two. And they're in really good locations as well. So there's still
probably our favourite strategy within the HMO model.
Really, at the moment,
you're buying in areas that you're not really going to get new HMOs. It's usually nicer stock, old Victorian stock, bigger proportions, quite often closer to employment, universities maybe. It's return. You're usually paying a bit of a premium to get in. So the returns on paper are usually not quite so high.
But for the longer term growth and store of value, I think it's a good bet.
100%.
Jake, thank you so much for everything, including the help that you gave us. It shan't be forgotten. I hope to see you as an entrant into the next Property Investor Awards.
Absolutely.
And I hope you can come back with Lucy one day so we can have a good chat together.
Definitely.
Thank you very much.
Cheers, Sam. Thank you.
Cheers.
Cheers.
Happy days.